What is going on, investors? Hopefully you guys are having a great day out there. Time to talk about Nokia Corporation, ticker symbol NOK. Different kind of video that we're going to discuss here on the channel. Now, we are going to go into the numbers of Nokia just in case any of you are fundamentally wanting to invest in this company or have been invested in this company. We will take a look at just the revenue and the profits. There was an interesting line here that caused quite a big net loss here on the company. So we'll talk about what that was, whether or not that reoccurred, and whether or not fundamentally this is a decent business. We'll also talk about in the press release, they talked about their dividend, whether or not that might return or it might not. Now, here's the other part of the video that we'll talk about as well. Nokia obviously was wrapped up in this kind of like meme stock, Robinhood, WallSt Bets news cycle over the last week or so that saw this stock go from like a $4 stock all the way up to $9, basically in like a course of like 2 or 3 days. We have a gigantic candle here. You see here, look, this stock went from $5 all the way up to $9. Gigantic volume, like volume never seen before in Nokia, basically based on kind of WallSt Bets kind of news cycle euphoria, kind of greed cycle. Now, so the first thing I want to talk about is turning a trade into a long position and why that is a big mistake. And if you've made that mistake, don't worry. Count it as a lesson learned. It might have cost you some money. Maybe you're down in Nokia. Maybe you bought up here at $8, $9 with Nokia, and now it's stuck down here at $4, and you're wondering what the heck you're going to do, right? Okay, so first thing that we want to talk about is the WallSt Bets euphoria basically targeted stocks like Nokia and more specifically like GameStop and a few others that were heavily shorted, okay? And what they wanted to do was kind of group buy it and force the hedge funds or whoever was short those stocks to have to come in there and buy the stock, essentially creating a short squeeze. And they were epically successful in that. So WallSt Bets strategy was to buy heavily shorted stocks, create a short squeeze, and make a bunch of money. That was their strategy, and it was executed almost to perfection, right? Okay, so if you got in on Nokia based on WallSt Bets strategy, you needed to get an entry price with Nokia. As with any trade, you need an entry price, an exit price, and a stop loss. I'm going to repeat that. If you're going to trade a stock like Nokia or Apple or any stock out there, you're going to trade it. I don't care if you're trading it based on momentum and news or you're trading it based on some kind of technical setup. You need an entry price. So in this case, maybe $5 a share. You need an exit price, maybe in this case, $8.50 per share, and a stop loss, which in this case could have been $4.50 per share or something like that, or anywhere along there. Create an entry, exit, and stop loss with every single trade you do, and then you won't get stuck in this position where you could have potentially bought Nokia or GameStop or any of these stocks that basically made this big green candle, and now they are selling off and selling off rather rapidly. So the mistake I don't want to see you guys make is now you bought on this green candle and now you're looking into the business, you're looking into the numbers. So I wanted to stress that before I got into the press release and the numbers. If you're stuck here on this candle and now all of a sudden you're diving into the numbers, you're doing it completely wrong, okay? But don't worry. I myself have made this mistake. Every trader out there with any kind of honesty to them will admit to making this mistake at some point in their career, usually early on in their trading or investing life. They kind of turn trades into long positions, and it is a big mistake. And we see here with Nokia and actually all these stocks, it is turning into a big mistake. Now, not the full story. I tell you what, this stock technically is probably setting up for a bounce, at least a small one. And we'll talk about that, and we'll talk about these numbers. Now, here's the deal. Nokia expects next sales to be affected significantly to decline in the mobile networks unit that they have because 4G footprint into 5G footprint in North America has been going kind of slow, okay? And there's some price erosion in there as well, okay? You got competitors and just in general, you've got price erosion there. And the other thing that you've got going on is they've discontinued basically a dividend. So they have not proposed a dividend here recently, but the board will assess the possibility of a dividend at some point taking into account their cash position, which appeared fairly good. And, so sometime this year, maybe even into next year, you might get a dividend for Nokia, but I wouldn't necessarily count on it. Now, let's jump over the numbers. If you are fundamentally investing in Nokia, these are important. And quite frankly, before you buy any shares, you should dip into these numbers. Now, there was a reason why Nokia and GameStop and some of these stocks were heavily shorted, or at least shorted to a certain degree, is because the numbers don't really look that good. So we've got reported numbers here. These are in euros. So forgive me if I say dollars. It's just something I'm, kind of a habit. We see here net sales in the previous year, fourth quarter, we went from 6.9 down to 6.6. So we see declining sales there. On the top line, we see for the full year, same story. We went from 23.3 down to 21.1. So we have declining sales. Now let's take a look at gross profit, because we've got these cost of sales. We'll minus that out. We get to gross profit. It went down to 2.5. We were at 2.7 in the previous year. Now for the full year, basically flat. We went from 8.2 to 8.2. So basically flat for a year over year view, but on the quarter over quarter view, we are kind of down. Now from an operating profit perspective, we've got research and development fees, selling, general, administrative, and some other expenses as well that actually ticked up quite a bit. We've got operating profit here. Actually almost got cut in half. So we went from 803 down to 475. So that is significant. I'm sure investors were telegraphing that to a certain degree. Now for the full year, paints a completely different story. We actually went from 485 up to 918. So we actually almost doubled our operating profit for the full year. So we had a good first start of the year. Back half of the year, pretty bad for Nokia. Now, here's the deal with Nokia. What was interesting is they have this gigantic income tax expenses. It appears, I'm not a tax expert, but I read through the note a little bit, and it appears that they had a tax benefit that they don't think that they were going to realize. So they had to put it on the balance sheet as a loss. And here it is at 3.1 billion euro. Okay. And that just absolutely obliterated their profit. We see here a loss from continuing operations at 2.6 billion loss. In the previous period, we were at a 563 million euro gain. Now, here's the deal. From a loss perspective, we lost 18 million in the previous year. So for the full year, made 18 million. Okay. This is a company that's valued at $25 billion. Okay. And then you see here in 2020, we lost 2.4 billion. So this is a company that's not really making money. They've ended some shareholder friendly stuff like the dividend. They're projecting a significant decline in mobile networks because of 5G footprint in North America is kind of slow. It's not good, not a great story from a fundamental perspective. Now, from a technical perspective, you can kind of wipe out this big green candle. This is just euphoria. This is, I wouldn't want to say foolishness. This is just gigantic greed. And you see this in the stock market. You see big greedy candles like this. This is where a lot of money gets trapped. And so that is something that from a technical perspective, you do want to be aware of. Now, there is a I tell you what, there's a pretty nice level down here. I drew this candle. You could have extended this trend line way back in here. I mean, this goes back a ways. This candle where we're sitting right at this 50-day moving average, we'll call it $4.20. Hey, what do you know? $4.20 is a critical level for Nokia. So easy number, I think, for some of you to remember. $4.20 could be where this stock comes down and rests. We are filling this gap. This stock kind of broke into the news cycle, created a gap. There was this big euphoria and it's come down. It's filling this price gap perfectly. And we could see a bounce at the $4.20 level because there is a big, gigantic support line, but also you have your 50-day moving average. So from a trading perspective, Nokia is setting up very close, about 20 cents away actually from this technically bouncing. So from a trading perspective, this is just a sample trade. Put a buy in here at 420. I'd put a stop loss down at, I'd call it 405 or $4. And I would want to get out of this probably at 455. So you got about 30-cent upside and about, we'll call that 15-cent downside. That's actually a pretty good risk reward. Okay, now here's the thing that you want to keep in mind with Nokia. If you're long, say you bought this stock a long time ago, you're in it for $3 and you didn't care, it popped up here, you didn't sell. So here's the deal. All this money is trapped up here. This big, look at this big gigantic volume bar. I mean, you never see anything even close to this. This is a ton of retail kind of Robinhood investor trapped money. Okay, the WallSt Bet guys were probably smart and they got, hopefully many of them got out of this one, but we've got a ton of trapped money. So as this stock comes back into the $5 range, a ton of sellers are just going to step in on this one, okay, because they feel like crap. They bought this thinking it was going to go to $1 million per share, and all of a sudden now it's down below where it was just a few weeks ago. So, there's a ton of trapped money in Nokia. That's just something that you want to keep in mind. I gave you an example trade setup in this one. That is all I would try to scalp out of this one, okay? I would try to scalp, 20, 30 cents a share out of this one and try not to lose more than 5 to 10 cents per share out of this one, because it is still in the news and some volatility still could be in a name like this. So from the fundamental perspective, not a great story with Nokia. I think you could wait till the story kind of plays out a little bit before you kind of jump in on this one. From a trading perspective, probably a little bit better with Nokia, which is not something we normally talk about here on the show, but from a trading perspective, this is not bad. This is probably going to go on my watch list, to be honest with you. I don't advise buying stocks under $10. Okay, I just want to make that clear. But we made an exception today because I thought we could learn a ton of lessons from Nokia and basically what has happened over the last week or so with WallSt Bets and Robinhood and things like that. So hopefully you guys enjoyed this video. A little bit different. We'll be back again very soon on the channel again. Good luck with your investments.